You buy a stock exactly as it breaks out, only to watch it immediately reverse and trigger your stop loss, cracking from the inside. Over the next 5 minutes, we are going to build a 3-step mechanical screening system used to identify high-conviction setups and filter out these recurring fakeouts. To follow along, you'll need to open your charting software. Make sure you can clearly see a stock's pivot price, its current base stage, and its accumulation distribution rating. Looking at price action alone provides an incomplete picture of a stock's strength. Combining it with institutional data allows us to see if a breakout has the actual volume support required to sustain a move. Step 1 is isolating stocks based on their exact distance from the pivot point. The pivot point is the mathematical threshold where a breakout technically begins. We want to target a very specific window. The textbook buy zone exists strictly between 0% and plus 5% above this exact pivot price. This chart maps candidates by pivot distance. The green band is our actionable window. Eli Lilly is at the pivot. Backblaze is 1% past. Don't chase extended stocks. Cheesecake Factory is up 18% and Exelixis 12%. They are out of bounds. Strictly obeying that 5% rule removes the emotional pressure to chase. It helps protect the trader from the sharp pullbacks that often occur when a stock gets stretched too far from its initial base. Step 2 involves verifying the foundation by checking the base stage. Chart patterns aren't static. They have a measurable life cycle. We want to target stocks in stage 1 and stage 2. These early stages represent the start of a potential trend, where fresh accumulation is typically strongest. A stock builds its first consolidation, stage 1, breaks out on heavy volume, and then pauses to build a secondary pattern, stage 2, at a higher price level. As you move into late-stage bases, like stage 3 and stage 4, the trend is aging. These setups are often more volatile and carry a higher risk of failing because the move is already well underway. Verifying an early base stage ensures the stock has the structural support required to potentially sustain the breakout we identified in Step 1. Step 3 is designed to identify hidden distribution. A stock can look constructive on a price chart, while institutions are quietly selling shares into retail buying pressure. To see this hidden institutional behavior, we use the accumulation distribution rating. This metric reveals the volume-weighted quality of the price moves. Our system requires a quality floor. We generally reject any stock with an AD rating of C+ or lower, looking instead for a minimum B rating. This scatter plot maps candidates by buy zone proximity on the horizontal axis against institutional quality on the vertical. We focus on the quality threshold at the B rating. Everything below this line represents active institutional selling, increasing breakout failure risk. This creates a filter for the retail trap, stocks appearing in a perfect buy zone but suffering heavy institutional distribution underneath. Look at the bottom segment of our green band. Both Valero Energy and Indivior Pharmaceuticals are sitting inside the actionable price window. Indivior is exactly 1% past its pivot, but its E rating signals heavy institutional distribution. This suggests that while price is rising, larger players are potentially using that retail interest to liquidate their own positions. Now shift your focus to the top half of the green band. Here we find Cadence Design Systems, Backblaze, and Eli Lilly. These names carry A and B ratings. These stocks are being supported by institutional volume, which provides the necessary participation to make a breakout more reliable. Combining precise price positioning with these volume metrics creates a filter for identifying where institutional support is actually present. By applying these 3 rules, we've taken a list of 44 stocks and narrowed it down to high-conviction trades, like Cadence and Eli Lilly, that are currently positioned for entry. We also have high-quality stocks in the near zone, names that passed our institutional filter but are currently just beyond the 5% buy limit. For a stock like Progeny, you can set an automated price alert. If the price pulls back into that 0 to 5% window, you'll be notified of the new entry opportunity. By strictly verifying price, base stage, and institutional volume, you've moved from guessing to operating a mechanical, repeatable screening system.